Hi everyone, this is Jim from Turning Point Life Investment, and this is the week of July 13th, 2008. And let's just do a quick recap, weekly recap of the market. Specifically, we're going to use the SPY. Alright, let's take a look at the monthly view. I always want to take a look at the broad market on a long-term perspective, just to get an idea of what's going on long-term wise. One thing you want to notice is that for the last 3-4 years, we've been trading above the 20 and the 50-month moving average. Now, this is the first month that we have broken down underneath the 50-month moving average. And that's bearish right there. Okay, trading above it, above the moving average, obviously it's bullish. But once we break below it, as you can see right around this level, this is pretty bearish. Okay, so this lets us know that there's definitely more downside to this decline. I don't think there's a bottom in sight yet. All right, let's take a zoom in to see a possible looking for possible support levels. One thing I do notice is right around this area we have support back around the 120. Nice even number. Support and resistance, typically look for those even numbers, 120. Right. The next level will be right about 115-ish. Okay. So we have 120 and 115 as a potential support levels. We already had 6 weeks of straight decline. Markets don't go straight up and don't go straight down without some kind of relief. So we are expecting some kind of potential temporary bottom, as you can say, um, near term, but it's just a matter of when. Whether it's this week or next week, we're not sure. But at least you can tell prices are pretty stretched out from its moving average, as you can see here. All right, and think of a rubber band. When it's stretched too far, sooner or later, when someone releases that rubber band, it's going to snap back towards the center, and that's what we're kind of expecting right here for it to happen. Just kind of snap back towards the 20. All right, let's take a look at the daily view. Now on Friday, let's zoom in a little bit here. On Friday, I want you guys to notice that we did close on a doji candlestick. However, we have had several bullish reversal candlesticks before earlier this week. We had a bullish engulf and we had another bullish engulf earlier, but obviously there was no follow through. So we're not sure how reliable this doji is going to be. The good thing it is that it's on high volumes. Typically, bullish reversal candlesticks do better on high volume, as well as stochastic is oversold. It's coming out of oversold, which typically is a bullish sign, and the MACD is also coming towards the positive end. All right, so you have several clues that are pointing towards a possible near-term bottom. Let's take a look at the hourly view. That's what I like to do. Just kind of look at prices from a monthly, weekly, daily, and an hourly view. Get a full perspective of prices on all different time frames. One thing that I want you guys to notice here also is that notice how prices have been trading underneath the 50-hour moving average, and the 50-hour has been great entry points for puts, right? Case in point here, 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 as well as here. So not until prices can trade above the 50-hour moving average will it be a little more bullish, so to speak. Okay, so wait for it to trade above. That will be our first sign of the rally that's coming, or that everyone is expecting to come. So wait for the prices to trade above the 50-hour moving average before, basically before entering any bullish trades that you do have. The last thing I want to look at is the VIX. If you guys don't know what the VIX is, it's a volatility measurement of the S&P 500. Back here, the two highs that we had corresponds to the two lows that we had back in mid-January and mid-March. Now, where are we at? We're right smack in the middle. We're not exactly at the high levels in the mid-30s, and we're not exactly in the low levels back in the mid-teens where we had our previous high mid-May. We're right in the middle. So what does this tell us? This tells us that there's definitely more downside. Not until we get back into this area, this level, can we say that a possible bottom is in sight. Okay, but right now we're right smack in the middle, and there's a steady uptrend going for the VIX, which means that it's a steady downtrend for the S&P 500. Okay, so overall we're not exactly near a bottom, but we are near a short-term temporary bottom. At least we feel coming in the near future. All right. Okay, well that concludes this week's analysis. We'll look forward to seeing you guys again next week. Have a great day.